Hey everybody, and welcome back to Dollars and Cents, helping you make sense of making dollars. And this video marks exactly 365 days since uploading my very first video onto this channel. First off, thank you for all the incredible support. Seeing this little idea I had to make investing videos at the end of 2020 grown to over 800 followers in just 1 year blows my mind. So let's make 2022 even better with a lot more research, a lot more companies, and making a whole lot more dollars. To start this new year, let's look at 5 interesting companies I have on my personal portfolio watch list. We'll go from the quote-unquote worst companies to the ones I think are the best, although they're all pretty solid. So let's get started. Sitting at number 5, I did a video about this company a couple months back, and I'm still fascinated by it. PayPal is one of the biggest of the payment giants, and is one of the most dominant companies on the entire internet, with nearly $1 trillion flowing through its platform last year alone. Its business model is really simple. PayPal makes most of its money through fees it collects on transactions. 2021 saw tremendous growth with many people around the world moving online. PayPal saw a massive spike in both revenue and share price, its stock spiking over 250% from pandemic lows. Yet recently, the stock price has slid almost 40%, so I think it's a good idea to take another look at the company. If you want to learn more, you can check out my video on PayPal or any of the other companies I list in the pinned comment below. And while you're down there, a like and a sub would be greatly appreciated if you enjoy the content. Next at number 4 is BRY Global, ticker symbol BERY. Now, I came across this company fairly recently. In many ways it resembles Graphic Packaging, another company I've covered before. It makes containers, plastic cups, prescription vials, diapers, tape, trash bags, and shrink wrap. Like PayPal, BRY Global also saw a solid year in 2021, with share prices up about 150% from March 2020 lows. And honestly, BRY is quickly becoming one of my favorite quote-unquote boring companies. It's just slowly moving along, buying up smaller companies to add to its already vast product catalog. Plus, its revenue is steadily growing every year, making it a fairly financially stable company. I also believe it's relatively cheap as well, trading at just 12 times 5-year average free cash flow and a PE of less than 20. If anything, I think BRY Global is certainly worth a closer look, and I would expect a video on it soon. Coming in at the number 3 spot is Shopify, and actually I just made a video on this one. Easily one of the most dominant companies on the internet, Shopify saw 8.6% of all online transactions happen through its platform alone. With its unique style of the quote-unquote arming the rebels, Shopify has had a pretty incredible last 2 years, from an explosion of revenue to the incredible 52% user growth rate year over year. Shopify has easily been one of the most exciting pandemic companies to watch, but it's not without some concern. As we approach the end of the pandemic and its economic hardships, Shopify may face some growth challenges. While the recent downward trend continues for its stock price, and that may concern some, I actually still think it could make a terrific addition to basically any portfolio at this point. Standing in the number 2 spot is AZEK, ticker symbol AZEK. On the surface, some may see this company as simple, but there's much more going on underneath. Its main revenue driver is its TimberTech faux wood decking products. Exciting, I know, but AZEK is absolutely capitalizing on the growing trend of homeowners investing more money into their outdoor living spaces, such as decks and so on, and the trend to use faux wood over traditional wood as well. Yet AZEK sells a lot more than just decking and railing through TimberTech. It also produces siding and trim boards while owning several smaller companies like Ultralocks, Versatex, and Scranton Products. And we're talking everything from metal railing and siding to bathroom dividers and even school lockers. Overall, I think AZEK offers an interesting way to invest in both a growing trend and a company that does a tremendous job of using its capital in acquisitions and R&D. But amongst all these companies, there's one that I believe outshines the rest and claims the throne for the coveted number 1 spot for 2022, Krispy Kreme. That's right, you heard correctly, ticker symbol DNUT. Krispy Kreme is one of those companies that people know and enjoy enjoy for its good, gooey glazed donuts, but that most don't know is actually a publicly traded company. In June 2021, it filed for IPO. Believe it or not, this is actually the second time it's IPO'd, and hopefully this time it'll stay on the market for good. So far, Krispy Kreme has seen a rocket of a year, both revenue and EBITDA exploding upwards to new heights, opening dozens of new stores across the globe. It now operates in 30 countries with over 1,500 locations, but that's just one of the lesser reasons I like this company so much. There are a lot of reasons, actually. One is the incredible ability to drive online sales. Plus, it owns a small business named Insomnia Cookies, a cookie subscription-based company predominantly an online business. Go check it out if you like good cookies. Yet Insomnia Cookies isn't only good for its cookies, but also what it's done for Krispy Kreme's online presence. It led the company's push into the online market. Acquired in 2018, Insomnia Cookies has led Krispy Kreme to an impressive revenue growth at $350 million, and that's a 43% increase year over year. Personally, I love the idea of cookies being delivered directly to your door, and I think it's safe to say that it's been fairly successful both on its own and for Krispy Kreme. Not only that, but Krispy Kreme has incredible pricing power. It seems donuts can be a pretty reliable business, at least from the company's CEO perspective. While the company has been forced to raise the prices on some of its items because of staffing and supply chain issues, Krispy Kreme has mostly been able to absorb many of these headwinds, and that gives me a lot of confidence in the business as a whole to be able to withstand any sudden economic shifts. And honestly, when I think about Krispy Kreme, it reminds me of what famous investor Peter Lynch once said about another famous donut company.
I can understand it, and you laugh. I made 10 or 15 times my money in Dunkin' Donuts. Those are the kind of stocks I can understand. If you don't understand it, it doesn't work. This is the single biggest principle.
And with that, our top 5 stocks for 2022 concludes. Now, these are not companies I own, they're companies I want to own. Of course, I'm going to wait for the prices I'm hoping for. I've got my own ideas on what each company is worth. And if anything, I hope this video gives you some ideas about some companies maybe you've never heard of. Remember to check out the links in the pinned comment if you need a starting point. And I'd love to know what stocks you're looking to buy in 2022, which ones are on your wish list. Let me know in the comments section or join my Discord for a conversation. With that said, thanks for watching. I hope 2021 was a good investing year for all of you too. Until next time, I'll see all of you in the next episode of Dollars and Cents.